Josh Brown, go to you first. You told me the dollar, at least, was the whole ball game. Those were your words yesterday. But this is an amazing story today. What are your thoughts now on what it means for stocks going forward here?
This is the biggest one-day dollar decline in like 7 years, and that's why you get a 1,000-point Dow rally. That's why you get the NASDAQ doing what it's doing, because all of these stories are very interrelated. And I think the new thing you're going to start hearing, like where the puck is going, is you're going to start hearing people say, you know what, actually, I think inflation is still overstated. You know, we've got these lags in the way the shelter component is calculated. Everybody can look around them and see homes aren't selling, home prices are falling, rents are now falling. They're staying a little bit more stable for people re-signing existing leases, but for new leases, I don't think it's anywhere near 7 or 7 point something percent. So I actually think we are going to be a little bit calmer. You'll probably see less volatility in bond yields now with each successive inflation report, not the CPI, but everything that goes into it. You're seeing used car prices. You're seeing layoffs all over technology and media. So I think we're going to just have a little bit less volatility. But where the puck is going is, yay, things are slowing down, and then take a beat. Wait, things are really slowing down. So I hope we get a month. You know, I hope we get a month to 6 weeks before we start worrying about, well, wait, how fast is it slowing down? But it's a big change, and I don't think that we should. I don't think we should try to pour cold water on the meaning of this. I think it's very important psychologically for the market that there is this sense that we're past peak inflation. Still tons of inflation, but well past peak inflation, and all of the trends are now going in the same direction at once.
So, Jason Snipe, does this open the door to a significant year-end rally? Let's call it over the next 6 weeks, as Josh said, assuming there are no shocks in between. Does it do that?
Yeah, I think obviously these numbers were very positive today, and the market's obviously responding, tremendously to the numbers. So what I would say about, just kind of looking ahead, and looking to the Fed and potentially in December, 50 basis points, starting to be priced in. We saw some dovish commentary for some Fed speak today. Harker talking about a terminal rate at 4.5 and maybe pausing. The dot plot, has a terminal rate under 5 now, but at 4.5 is significant. And then, other less hawkish speak from the Fed. So as I look to the market and I look at what could potentially go from here, and Josh already alluded to it. I mean, home prices are falling off the table. Used car prices have come down some. So there has been some deceleration in inflation. And I think that will show up in some of the reports, some of the earning reports as we look to going into next year. So I think the market can. And then we got an election, results that wasn't exactly a red wave, but we do have gridlock. So there's a couple of catalysts here that I think could push the market forward. Definitely in the near term. So I think that's what we can see here.
Rob, your research team over at New Edge has been more negative of late over the last, let's call it several months. Cameron Dawson comes on Overtime a lot and has articulated that view, including yesterday. Does this make you guys more positive now? And if not, how can't it?
Well, I think in the near term it does, because slower hikes and lower terminal rates causes bonds to rally, and it causes the dollar to drop, which is near-term bullish for equities. In addition, we're right at a critical point where we may break through 3,900 on the S&P. That has been a key resistance level. And in order to make a run to the 200-day moving average, which is 4,100, we think you need to have some of this positive momentum. And of course, seasonally, this is a strong time. And Jason already mentioned what happened in the midterms.